Welcome back to Explain the Charts, everyone. Today, September 16th, 2025, we're taking an in-depth look at GBPUSD, a pair that's seen some significant action and is poised for even more as crucial economic events unfold. Let's begin by understanding the current market sentiment and news driving GBPUSD. Reports indicate the pair has advanced to new two-month peaks around 1.3660, primarily fueled by a generalized bearish tone for the US dollar. The dollar's weakness stems from growing expectations for a dovish Federal Reserve outlook, with the FOMC decision expected on Wednesday to bring a 25 basis point rate cut and signal two more by year-end. This dovish Fed sentiment is partly influenced by Stephen Miron joining the Fed board and recent weak U.S. jobless claims, despite better-than-expected August retail sales, which surprisingly did not boost the dollar. On the other side, the Bank of England is expected to keep rates unchanged at its Thursday decision, with recent UK economic data, including CPI and flash PMIs, showing hotter results and persistent inflationary pressures. This divergence in monetary policy expectations creates an interesting dynamic for GBPUSD, with the immediate path of least resistance appearing to be to the upside, while longer-term forecasts suggest potential dollar strengthening into 2025. Now, let's turn our attention to the charts to see how these fundamental narratives are reflected in price action. On the daily chart, spanning from May 2024 to September 15, 2025, we can clearly see the strong bullish momentum GBPUSD has experienced since early 2025. The pair has climbed from roughly 1.24 in February to current levels, recently breaking above a key resistance at 1.3589, as highlighted by our news sources. The closing price of 1.36004 on September 15th emphatically confirms this breakout, pushing GBPUSD into fresh two-month highs and validating the short-term bullish thesis. This chart shows that buyers have been consistently in control, pushing through several minor resistance levels with conviction, often on strong volume. Narrowing in on the more recent action, let's examine the daily candlesticks from the last few months, specifically from July to mid-September 2025. Here, we observe a steady ascent, punctuated by occasional pullbacks that have consistently found higher lows, indicating healthy accumulation and strong underlying demand. The recent push through the 1.3589 level on September 15th, with a daily high of 1.36201, is a crucial development, turning previous resistance into new immediate support. Looking ahead, the next key resistance levels to watch on this time frame are 1.3640, which represents the Fibonacci 78.6% retracement, and the psychological round level of 1.3700. Should the bullish momentum continue, we could see an extension towards 1.3789, a level identified as a target for buyers in the short term. Moving to the one-hour chart, we get a more granular view of price behavior, though our available data for this timeframe focuses on a period in late August and early September. During this earlier window, we observed periods of consolidation and minor retracements, often characterized by tighter trading ranges, before the larger daily moves. While this specific data doesn't capture the most recent breakout above 1.3589, it shows how buyers tended to lean on upward trend lines during pullbacks in prior bullish phases. Currently, with GBPUSD having broken 1.3589 on the daily, traders on the one-hour chart should be looking for consolidation or pullbacks to this new support to pile in on bullish bets. However, a sustained break below 1.3589 on this timeframe could signal a short-term reversal, bringing into play supports around 1.3540 and potentially 1.3500. Let's dive into the 15-minute chart to inspect the very latest price action, focusing specifically on September 15, 2025. This zoomed-in view clearly illustrates the decisive move above 1.3589 on Monday, September 15th, confirming the bullish breakout seen on the daily chart. Price started the day around 1.355 and steadily climbed, hitting highs above 1.36 before consolidating slightly towards the end of the trading day. Interestingly, the Forex Factory News mentioned a Wave 4 reaction zone between 1.3615 and 1.3598 on September 15th. GBPUSD indeed entered and is now interacting with this very zone. This suggests that while the overall trend is bullish, we might see some short-term consolidation or minor retracements within this area before a clearer direction emerges. For short-term traders, sustained price action above 1.3598 to 1.3600 could indicate further upward movement, targeting 1.3640 and then 1.3700. Conversely, a rejection from the 1.3615 resistance level on this time frame and a move back below 1.3598 could indicate a short-term bearish reversal. In such a scenario, traders would look for a retest of 1.3589 as immediate support, with a break below this level opening the door to 1.3540. Now, let's summarize the bullish and bearish arguments for GBPUSD. Reasons to be bullish in the short term include the sustained US dollar weakness driven by dovish Fed expectations and the clear breakout above the 1.3589 resistance. The current bullish momentum, reaching new 2-month peaks, also reinforces this upward bias, suggesting further upside potential towards 1.3640 and 1.3700. A strong upside surprise in U.S. retail sales or a less dovish FOMC statement could provide temporary USD resilience, but the overall trend appears to favor GBP strength. Conversely, long-term bearish arguments, particularly for the remainder of 2025, are presented by FexStreet's Thvani Mehta, predicting potential USD strengthening due to monetary policy divergence. The Bank of England's expected dovish stance, with up to 3 rate cuts priced in for 2025, contrasts sharply with the Fed's potentially more cautious approach under a new administration. Technically, a long-term bearish outlook would be reinforced if GBPUSD were to break below its 18-month rising wedge support at 1.2682, which is currently a distant but critical level. For short-term bearishness, a failure to hold above the newly established support at 1.3589 and a sustained move back below could quickly lead to targets of 1.3540, 1.3500, and potentially 1.3368. This could be triggered by hawkish surprises from the bow or stronger U.S. economic data contradicting the dovish Fed narrative. In recap, the critical price levels to watch for GBPUSD are the immediate support at 1.3589 and subsequent supports at 1.3540 and 1.3500. On the upside, immediate resistance is at 1.3640, followed by the psychological level of 1.3700 and then 1.3789. A bullish continuation to 1.3700 is quite likely, perhaps 60 to 70%, especially if the upcoming FOMC meeting confirms a dovish stance from the Fed and UK data remains strong. Conversely, a short-term reversal back below 1.3589 is less likely at around 30 to 40%, but could be triggered by a surprisingly hawkish bow or unexpectedly strong U.S. economic data. Longer-term bearish predictions targeting below 1.2900 are less probable in the immediate future, perhaps 20 to 30%, but remain a possibility if significant monetary policy divergence materializes over the year. Key upcoming events include UK employment and US retail sales tomorrow, September 17th, followed by the highly anticipated UK CPI and FOMC policy announcement on Wednesday, September 18th. The bow rate decision and U.S. jobless claims on Thursday, September 19th, and UK retail sales on Friday, September 20th, will also be pivotal. These events will either reinforce the current bullish trend or provide catalysts for a significant reversal, so keep a close eye on these announcements. Always remember to manage your risk, consider your time frame, and adapt your strategy as new information becomes available in this dynamic market. Thank you for joining Explain the Charts, and we'll see you next time for another in-depth analysis.